brain is where the heart is, but after a 20-year military career, Major Papis and her husband Andreas and their teenage kids have their hearts set on establishing a more permanent base of operations and buying their first home. They've found the perfect fit for their whole family. All that's left is to figure out how they will actually pay for their new place. Find out what loan options they have on this episode of Home Buying HQ.
Papises! Welcome to our home buying headquarters.
Thank you for inviting us.
Oh, my pleasure. How cool is it that you're buying a house in the same city where our production facilities are located? I think you guys are in for a real treat. Now, behind those doors is our brand new, state-of-the-art, virtual reality home buying experience set. It's a futuristic way to see your home while we walk through your loan options.
What? That's cool.
Like training simulation for mortgages?
Exactly. Think of it like a holodeck for home buying. Shall we?
Yeah.
Oh, you're ready. Let's do it. Let's go. All right, first of all, congratulations on your offer being accepted. That's so exciting. Now let's see how you're going to pay for it.
You mean we're gonna have to pay for it?
Right? Okay, so what's about to happen is we've loaded your new home into our 3D virtual environment. The system has crunched all the numbers and we're ready to walk through some loan options with you. The question is, are you ready?
Born ready.
Let's do this.
All right, now if you follow me into the magical world of virtual reality, we can get started.
Oh my God, babe, this is amazing.
Like me get a real house. For
Oh
real.
my
Cool,
goodness.
right?
This is
Yes.
so cool. I'm totally geeking out.
Oh my God, the kids would be so into this.
I knew you would like it.
Love it.
Okay. All right, let's get into it. Choosing the right mortgage is like choosing the right dance partner. You want one that's gonna move in harmony with you.
Okay.
Or in your case, your finances. So let's talk about a conventional loan.
A conventional mortgage is issued by a bank or a credit union. They're not guaranteed or insured by the federal government like FHA or VA loans. They typically involve less paperwork and tend to have lower fees than other types of loans. Borrowers can put as little as 3% down, although putting 20% down avoids private mortgage insurance, or PMI. Finally, conventional mortgages typically require a good credit score and low debt-to-income ratio.
Wow, what a cool experience, right?
Very. So let's recap some. Conventional loans have lower fees and less paperwork.
And no private mortgage insurance if we can swing a larger down payment.
FHA loans.
FHA loans are insured by the Federal Housing Administration. They're designed to help lower income and first-time homebuyers who may not qualify for a conventional loan. They require a down payment of at least 3.5%, and the borrower is required to pay mortgage insurance premiums, or MIP, often for the life of the loan. Finally, a benefit of FHA loans is they allow borrowers with lower credit scores and higher debt-to-income ratios to qualify.
Okay, so FHA loans, they're easier to qualify for and they have a low down payment.
But you have to pay mortgage insurance premiums, which can add up over time.
Roger that, definitely something to think about.
VA loans are guaranteed by the Department of Veterans Affairs. They're available to service members, eligible veterans, and certain surviving spouses. VA loans offer several major benefits, including no required down payment, no required mortgage insurance, and potentially more lenient credit standards.
One thing to remember about VA loans is the funding fee. It's a one-time charge that can be paid up front or rolled into your mortgage. It's dependent on several factors, one of which being how much of a down payment you make. So, as you can see here, since you're first-time home buyers and you're making a down payment of 10%, your funding fee will be 1.25% of the entire loan amount.
So with the VA loan, we avoid mortgage insurance, which is great.
And saves you thousands of dollars over the life of your loan.
One of the things I like about the VA loan is we don't have to make a big down payment, so we can keep some money in our pockets if we want to.
But making a bigger down payment will save us money on the funding fee.
Now, for the record, all 3 of these loans can come with a great interest rate, so it boils down to finding the right one for your financial situation. Some buyers have stronger credit and debt to income ratios, others can make a big down payment. All depends on what you're looking for.
Like the right dance partner.
Correct. Another important factor to consider is the term of the loan. A 30-year mortgage is pretty common, but there's also 10, 15, and 20-year loans too. The shorter the loan, the less overall interest you pay, but the monthly payment will be larger. Of course, you can always make extra principal payments to pay off the loan faster. All right, what do you say, you two? Let's head back to reality. We can crunch some numbers on your loan options and maybe make a decision. So, you've had some time to sit with it. Where are your heads at?
Well, we definitely amped up our game after that experience. And after viewing the numbers,
And a little bit of debate, we're ready to pull the trigger.
Great. So what are we thinking?
We're gonna go with